up. And then I just misspelled strategy too. We're going to talk about the sovereign strategy, because as we move into this Tesla, the one stock you need for this summer. What I really want to help people understand is that if you have a strategy in place to help you build capital in this environment, you're going to have more money to trade. So we'll talk a little bit about that in the next 36 months of this market. Anyone who was reading my piece this morning that I wrote about Circle and Tether, congratulations. You may have a stomach ache now. But that said, the core thing here is more monetization, more financial alchemy. Basically, this Genius Act, as I dove deep into it last night, basically just telling us, hey, they're going to find a way to financially engineer our debt. And the way that they're going to do it is with these crypto companies, the stablecoin companies, creating new demand out of thin air. And that just means more monetization, more debt. And as a result, more money for everybody to trade, and more higher S&P 500, and more instability, and more questions, and probably more Four Sigma events in the future. But for right now, we are still dancing, because once again, we go back to this chart, pretty simple. Remember, when we look at momentum in the markets, it's a very simple metric. This goes back to the work of J.D. Henning. And this goes back to the work that Tim Melvin, Scott Dunn, and myself have done in terms of analyzing momentum down to one number. All we are doing at the end of the day, the poor man's version of this. Now, I'm not going to go into the coefficients of every single sector and trying to drag this out, but I'm just going to give you the poor man's version of it. Take the number of stocks that are breaking out versus breaking down. Very specific beta metrics, very specific metrics for the week, very specific stocks that are up on the month. Put all the stocks on a bell curve, those stocks that fit into those very specific breakout conditions, minus the number of stocks that are in breakdown conditions on the S&P 500. Why does this matter? Because a lot of stocks that are breaking out compared to breaking down signal that money is coming into the market. Now, remember, there is a lot of money that comes in on a biweekly basis simply from retirement accounts. And that's one of the reasons why we're constantly looking at the S&P 500 above its 20-day moving average. There's just more capital flowing in, pushing equities higher, pushing stocks higher. And when it breaks under that 20-day moving average, something's up. Something is up. As I have explained, this FNGD, when that equation goes negative, the FNGD is very important. If this breaks above its 20 and breaks above its 50, let me just basically tell you what is happening. The FNGD is a leveraged ETN. This is a bank note. This is not an ETF. Why does this matter? Because when banks and other financial institutions go to the repo market with all of this cheap capital and leverage up, not only are they leveraging up treasuries, they're also leveraging up stocks, right? So they have these big equity positions that are leveraged on the back of a very small amount of capital. Well, what happens is if the FNGD starts breaking out, the way that this is structured, this has to actually start to buy net short positions. That becomes a negative feedback loop. And resultantly, what occurs is you start to actually witness, as this breaks up above its 20 and its 50-day, you are witnessing leverage coming out of the system. That is why this stuff breaks down very, very quickly the way that it does. And as I have shown multiple times, just look at the SPY. When this breaks down, it follows the same pattern every single time. All you have to know, we break down, we ultimately hit a point where there are no stocks in breakout territory, because funds cannot sell at that point without absolutely taking a bath. They stop selling. We have a short squeeze, and then we dump once they have sucked everybody back into the market. Then we look for the insiders to buy. Then we look for the shift in policy and accommodation, and then the market takes off again. That what you are seeing right now, this kind of almost Nike swoosh, that is the exact pattern that we have seen for every major event that has happened in the market going back to 2018. Okay? So this is the result of leverage in the system. And when there is deleveraging, that is where you see these types of sell-offs. We've had at least 4 Sigma event every year for the last 6 years. I forgot that in 2021, we had one. In fact, it wasn't a 4 Sigma event. It was a 7 Sigma event, and it was Archegos Capital. I completely forgot that happened. So 2020, COVID, 2021, Archegos 2022, the gilt crisis 2023, Silicon Valley Bank crisis 2024, Nikkei crash 2025, trade crash. We live in perpetual crisis. So what that means is you have to have a plan and you have to have a strategy and you have to trade it. And that's one of the reasons why we're talking today about the one stock plan. I'm going to be going live today with my masterclass at 1 o'clock. And instead of trying to trade around the SPY and trade around the Qs, one ticker, the most liquid, most active, most busiest options chain in the world, which is Tesla. And Tesla is already in the news this morning because Mr. Musk decided it was time to start a political party. And what better way to kick off the masterclass today than to start right at the 200-day moving average? This is going to be a wonderful opportunity to start to focus on how to trade this, not just intraday, but also around these moving averages. Because if liquidity expands, Tesla's moving higher. And if this cools off and we start to see a pattern where the markets start to break down, Tesla's going to retest that 220 level very, very quickly. All right. Stocks in the news, stocks you got to watch today, stocks you got to trade, stocks that have to be on your list. Strong AU. Look, we're back in an environment where gold is going to be ripping and roaring again. We have some geopolitical instability that we got to focus on again. We have focus on the trade side. And why is that? Well, if we look at the macro side on this, Trump has come back out with an August 1st deadline, sending letters to 14 countries, including Japan and Saudi Arabia, South Korea, not even close. Let's have some water. 25% tariffs loom. The markets have shrugged so far, but the FX and the commodities are on watch, and this is important. Gold's around 33.50. We're up 27% on the year. This is a geopolitical bid. A lot of uncertainty right around rate outlook, weaker dollar. Citi has warned about a pullback if economic growth holds, and there is intraday focus here on options for prime volatility. And I want to talk about just looking at Anglo Gold, Ashanti PLC, foreign company, strength in the RSI, but weakness in the MFI. This MACD is where I'm paying attention at the moment. As you can see with a lot of these gold stocks, as they have continued to climb higher, they have consistently retested their 50-day moving average before rebounding. And as I'm going to lay out to you when we talk about the next 36 months, which you can see in the tab right in front of you, what matters at this point is the consistency of monetary expansion in the future for at least the next 12 to 18 months. So gold should be moving higher simply because the global money supply is increasing over time as well. But there will be these sell-off periods and this profit taking. This is why I always tell you, just keep a very close eye on the GDX. This is the VanEck gold ETF. And as you can see, multiple retests of that 50-day moving average this year. Strength and momentum, continuous expansion of the monetary supply. And I'm looking for the MFI and the RSI to improve. For day traders, or at least just people who are trading intraday, the GDXU is the leveraged ETN around gold. This is tradable, but you want to switch over to volume weighted average price. And what you're looking at here is you're trying to find these periods like any other trade that we have outlined where you move down into that third or fourth standard deviation. Standard deviation trade that we have talked about consistently. We only had one of those moves yesterday. Came back down at around 1222 yesterday. Steep sell-off that happened on the SPX. Now, I have been trading the SPY, but obviously you could trade the XSP and the SPX as well. But a relatively short-term move, moved the SPY about $2. That is reasonable. These types of reversions are what we are looking for. We had a nice move toward the end of the day. I always advise pay attention between the following hours, 10 o'clock to 10:30, 12 o'clock to 1 o'clock, and then you're looking for the final 45 minutes of the day. If not, better time, 2:30 to 3:15, and then you break that up from 3:30 up to 4 o'clock. On GDXU, SIL is also in play. The silver miners continuing strength here again. This is monetary expansion and another stock that has consistently tested its 20 and its 50. This is an ETF for the silver miners. On top of those other names, you have ALB. A little bit of strength coming in. We talked to Blake last week, and Blake said, look, money flowing into the materials side. This has a lot to do with where we sit in the monetary cycle. There is a lot of movement right now into banks and commodities. So right now, as you look at this, ALB breaking above that 20 and that 50, you have this crossover here. That's obviously positive. We're going to see if we can get back to that 78 level on Albemarle Corp. Once again, materials looking strong. BAH, Booz Allen Hamilton, company that I haven't really seen much in the news lately, breaking above that 50, breaking above that 20. Once again, trying to see if we can test back to that 123 level. You have seen multiple periods of time where the stock has broken those levels, pushed back up to the 200, only to roll over. This is very, very strong on the RSI, very strong on the MFI, very strong on the MACD, very strong on the ADX. So I do like Booz Allen Hamilton with a nice natural stop, very tight at 109 if you want a little bit more space, down to the 106 level at that 20-day EMA. This has been a very nice little mover for momentum, obviously, coming out of these breaks. So a retest of that 200 obviously looks possible. On the weakness, BMI, SLAB, LRN, and CRK. Interesting to see CRK on this list after a relatively strong year. This was a stock that had a significant amount of insider buying by Jerry Jones, owner of the Cowboys, and on the executive board. I think he might be the chairman. Back at $8 last year. Put $100 million of his own money into the stock. We had a huge breakout move, 31. Now, big breakdown. Once again, as we break under these moving averages, it might not be a significant move, but your downside is a possible retest of that 200-day moving average. You have a natural baked-in stop here if you are trying to short or using any type of spread to the downside at 24.50. So shorting Comstock is an interesting move right now. Obviously, you got to pay very close attention to natural gas prices. The cleanest way to do that is the BOIL. And when BOIL is breaking under its moving averages, as you can see here on the 20 and the 50, that is bearish for natural gas prices. On the other side of this, the watch list is GII, JOYY, Yala, and FSM, Fortuna Mining Corp. Popping back above that 20-day, looking for a little bit of a pop. Hopefully a nice little retest of that 750 level if we can get it. But this has been a very strong momentum stock, very cheap as well in terms of strong F-score, strong Graham score as well, which we will dig into momentarily. I realize I am in the wrong room. There we go. Let's get in the right room, Garrett, because people are probably asking some questions. Cool. Are you bullish on long-term natural gas? No. Oh, why? Largely because of alternatives. I like. Okay, let's just put it this way. I don't like the upstream in terms of oil and gas, and the reason for that is because of the last barrel, right? So the marginal barrel in oil and the marginal barrel, or however we want to define it within natural gas, the alternatives are starting to ramp up, and you're going to see a lot of focus again on natural gas is going to be a bridge fuel. The core opportunity, though, you're starting to see a lot of focus in things like geothermal. You're starting to see a lot of focus in natural gas. So why would I speculate on natural gas prices, right, when I have this to trade? BOIL, when it breaks its 20-day and its 50-day moving average, I'm long natural gas. When it breaks under its 20 and its 50, I'm short natural gas. The key thing here is I don't care about the long-term narrative in terms of the price of natural gas. What I care about is the actual movement and flow of it. And what I mean by that is I want to own the pipeline companies. So stick to the midstream. don't speculate on the long-term upside of natural gas prices, right? This is the key thing. It's very important to keep this in mind. Just collect the tolls. Just collect the money for moving the natural gas, and don't worry what the natural gas prices are. And if you must trade natural gas, BOIL becomes your line in the sand. 20 and the 50-day moving averages, opportunity to try to ride spreads. If this pushes above its 20 toward its 50, simply take a simple stock, a stock, a company like or something like the UNG, and simply trade a spread that would represent between the two of these moving averages. The BOIL is a lot like the OILU, right? It's a simple reflection of upstream production and upstream prices. So what I'm always constantly looking for, especially on the OILU, is where we get into these oversold territories, MFI and RSI, at the same time. Because ultimately what we tend to see at this point is short covering, or at least the CTA is starting to move back in on certain at certain price levels. And what we're then do on the OIL is we switch over to a company like Apache and we go long Apache. This is the exact same time period back here in December. And as you can see, a move from 20 up to 25 in about 2 weeks after that covering started. Why does that matter? Because Apache has a high beta, 1.25, but in addition to that, it's very, very cheap to trade. So I don't care about the price. I don't care about the long-term bullishness of it. I want to be engaged in companies that are moving the stuff. But on top of that, this allows me to collect premium, or forgive me, not premium, allows me to collect quarterly and monthly yield, and then I can turn around and use that money for the purposes of speculating on the price movements. GII back in focus. We are back again with this thing. Gosh, GII apparel. This has been a disaster of a consumer cyclical company. But once again, you're just trying to play these overbought, oversold levels. I missed this when the RSI and the MFI were both oversold, but we are pushing back above that 20-day moving average, and you have that strength right here on the MACD. I would like to see something positive here with the ADX, and that ATR is really low, one. But nonetheless, can we get back up here to that 200-day moving average where we have tested multiple times? Hey, something to trade. And once again, with that 20-day moving average, you have a natural baked-in stop for a trade. KOLD, is that even around anymore? I thought they got rid of that. So cold, yeah, this is still around. I forgot about it. Cold is the inverse of natural gas. So yes, when this breaks above its 20 and its 50, that's bearish for natural gas prices. And I'm not trading the weather. This is all positioning, and that's what matters most. It's what CTAs, it's what traders are doing. It is not necessarily based on the headlines. Key thing to keep in mind. All right, a couple of things off the top. We talked about gold and silver. On the F and Graham score stocks, I want to just pull up the individual list. This will make it a little bit easier for me. Oh my gosh, there are a lot of these. 82. There are 82 of these stocks. Okay. Let's get off of this real quick. And let's go here. Jeez. Too many names, and it's going to be hard for you to see. Not much I can do about that, but let's try to expand this out. Holy cow. That's the current state of affairs here. Looks like it's time for me to update my Microsoft Word. All right, 20-day moving average down here is where we're going to be focusing. So here are the core names within 1 or 2 percentage points. We have, I'm going to give you a list. FSM. Why don't I just do this instead here? Wow, that is a lot of names. I was not expecting that. FSM, which we just mentioned, Fortuna. FSM, Fortuna Mining. So F score of 8.3, gram 0.88, 1% above its 200-day moving average. CRC's back on the list. So is Goodyear Tire, GT. Have not seen this name in a while, but GT back at $10. That's a tough one. consumer cyclical stock, but strength here. MFI looking positive, RSI looking positive. Actually, this looks like a pretty interesting one to potentially trade here. So I like this from a spread perspective. I'm going to probably look at doing a spread here where I'm going to buy the 10 and sell the 12 and go out to 2 weeks at this point. So buying the $10 call on Goodyear for July, third Friday, July, selling the 12. That's what I'm looking to retest here. Nordic, VIP Shop, VIPS, another Chinese name. Haven't seen this one in a while. Vips Holding. Hasn't really done anything, but as you can see, when this thing breaks out, it breaks out. I've always advised people when it comes to VIP Shop, focus on when China engages in stimulus. When they announce stimulus, the stock really has broken out, and I have not seen anything recently that would dictate that we should be making any move on that. MATX Matson is back in focus again. That's under its 20-day, not touching it, but we break above this 20 and it's 50. You might get 12 bucks out of this. JD.com is on this list as well. So there's a lot of Chinese stocks that are starting to show up. That's signaling some weakness, obviously, across the Pacific Ocean. Howard Hughes is in here as well. And this is an Ackman stock. So looking for Howard Hughes, not a lot of focus here, but $3 move. If we can get above that 200-day moving average, that would be very positive. That would be the play. I would wait to see if you can get above that range. Okay. Why did Slab drop? I don't know. Silicon Laboratories. I don't even know what it does. Semiconductor company. That's right. I don't know. It just got beaten up. Any headline? Slab surpassed 10 million chips. There's no news. There's no headlines. Nobody focuses on it. Need hair. Thank you. SEC Form 4 documents. So that's the next thing. Next key thing to keep an eye on is what's going on in the insider space. And what are we looking for in this environment? What have insiders purchased at the CEO and CFO level? So on the insider buying to selling ratio, as I have shown multiple times, insiders call the bottom of crisis, and they are obviously looking for policy shifts. This insider peak right here on the insider buying to selling ratio, that was the strongest purchasing since December. It also accompanied a massive amount of policy changes to calling off Liberation Day. Since then, the market has absolutely screamed higher. So keep in mind, insiders do call the bottom. This is net buying to selling ratio on dollars themselves. Very, very important. Key thing at the end of the day is just to remind yourself, you want to see it up here. You don't want to see the blue line, the 5-day moving average down here. Very important. Now you're getting some news, Alex, saying that the insiders or the slab decline was based on what was going on with China. I would probably agree with that, but I have not been doing my reading on that side yet. All right, here we go. So insider buying to selling, Asana. That's just Dustin Moskowitz buying more of its stock. Avoid that. Ignore it. I don't get it. PVH, $1 million in shares. This is coming from the CEO, Stefan Larsen. PVH, don't know much about it. Seen it before, but don't know enough about it. Let's go back to FinViz and take a look. PVH. What are you? Consumer cyclical. Okay. This is actually pretty interesting. So you've got a 1 million purchase at about 64 a share. We're at 73 already. Whew, that was quick. That purchase was registered on the 26th, so I don't know how I missed it, but I did. I wasn't talking about this one. I haven't really been digging into the insiders with all the focus on Tesla, obviously. But here's your 20-day moving average. That is a natural baked in, or 50-day. That's a natural baked in stop there. See if we get any continued strength out of that. PVH flat, Rock, Opportunity Corp, don't know much about that. Coastal Bank shares, interesting to see directors buying this stock. I would be paying very close attention to this if it is trading under its tangible book value. CSSO, TBV. Let's see what we have. COSO. Okay, let's see. What do we got? bank shares. Shoot, what's the book value? I can do enough with just the book value. Book value is 1.26, so that's a little elevated from a value perspective. Price to book 1.12 on Guru Focus, and Yahoo's saying 1.26. I don't know why. But that said, I want to pay very close attention to this because, again, insiders, executives buying at the bank level, you've seen a lot of purchasing in the regional banking space in the last couple of weeks from institutions, very significant. DPST, which is the Direction Daily Regional Bank Bull ETF, big crack above that 20-day, 50-day move back on June 24th. This has gone up about 33% since then. The KRE moved to overbought. So obviously you could see some selling here. I know that there's been some focus on this to the downside. This is kind of the later stage part of momentum, and I'm going to briefly talk about that in a moment. But the regional banking space, community banking space, everybody is looking for reform in that space right now. And why is that important? Because there are dozens of banks that are trading for less than the sum of their parts. And in the event that that actually transpires and we do get regulatory shifts, that's going to unlock a lot of these companies, particularly for M&A activity. I remind you, TFSL exists. TFSL is a regional bank that is based in Cleveland. This company has a very robust amount of real estate in its portfolio. But here's the key thing. This is a thrift. This was a company that had two parts to its thrift. It did the first back in 2008. Since then, 81% of shares are owned by a thrift, effectively a management company. They forego their yield, and they actually return all of that cash to the outstanding 19% of shares that are owned in the retail space. Why does that matter? Because the dividend is a whopping 8.5%. And what's nice about this, eventually they're going to have to convert and they're going to have to finish their thrift for one of two reasons. One, they either sell to somebody else, or two, they want to buy somebody else. They have to complete the second version of this. So you're being paid 8.5% to just sit around and wait. And which is really, really nice about that is the yield has never gone away. And on top of that, here's the thing. If you look at the tangible book value of this stock and you analyze it, it's going to say that it's trading at like 3 times book. It's not. This is absolutely wrong. 6.75 book, forgive me. Because this is analyzing all the stock. The only thing that matters is the outstanding 19% of shares. And why does that matter? Because the actual tangible book value of the stock is somewhere around 0.4, which means one day you're going to wake up and this company will have converted its thrift, and then ultimately it will either sell to somebody else or move on. This is worth 30. This is a stock you're going to wake up one morning and it'll be at 30. So take the dividend for now, dividend reinvest it, and then simply wait. Might be a year, might be 2 months, might be 10 years. But hey, 8.5%. And that's what this is really about. I got 6 minutes, and I just want to walk everybody through where the hell we are right now, right? Mark's on top of it, more activity. The thing about the regional banking space, the regulatory reform is necessary for the regional banking M&A. That's the key thing, because you've got within the banking space, very old boards, high technology costs, high cybersecurity costs, major changes in the wake of Dodd-Frank. They have to not hold these community banks to the same threshold as JP Morgan. Evercore, Goldman, a handful of the other big M&A firms levered up this year for M&A in the financial space. There was a bidding war for the top M&A analysts and lawyers at the start of the year. But the M&A activity has not truly come to fruition yet in the banking side. There is so much pent-up demand in the banking space right now for M&A that it's going to unleash at some point. So go and look at the regional banks and the community banking space and look for companies that are trading under a tangible book value of 1. Remember, when we look at valuations of companies that can be taken over, that is not a financial company. You want to use enterprise value to EBIT. That is what Toby Carlisle calls the acquirer's multiple. But in the banking space, as my father-in-law Tim Melvin has laid out, you have to focus on tangible book value. Totally different metric and only in the financials. TFSL is the ticker. All right, so 4 minutes. I need to speed through this, and I apologize. We're going to be a little quick on this, and I'll dive a little bit deeper today into the 1 hour session that I have at 11:30. The de-dollarization movement is continuing. I mean, it's obvious in the way that we're watching the U.S. dollar breaking down. The UDN, which is the inverse bearish ETN or ETF, for the dollar. This has obviously gone from 1680 all the way up to roughly 19 this year. Very strong momentum on that 20-day purple moving average. So the dollar continues to break down, and that is all part of that broader trend of de-dollarization, right? With that, the central bank is playing this playbook, and it's just going to be a continued monetary inflation for at least the next year to year and a half. As I laid out this morning in this one article, I was explaining that the new trick that they're going to engage in, remember, we have all those leveraged hedge funds that are taking up about $850 billion in Treasury. The new Genius Act will require all the stable funds to own short-term T-bills in the 93 days or less period. So they're just basically creating artificial demand for treasuries through the stable coins very, very quickly, right? It's insane, but it's how we're going to do it. Now, through this, you have these liquidity cycles that we've talked about time and time again. If you haven't seen the wave speech, again, it's in our archives. We are seeing increase in liquidity right now. This is going to increase into 2026. More money means higher equity prices, and it also means more instability. As I've noted, the U.S. equity markets, the S&P 500. This is the S&P 500, and this is an inverse chart of the overall economic conditions index. What this is showing you is that the S&P 500 is not forward forecasting in any way the economy in 6 to 12 months. It's actually just tracking liquidity expectations. It's been this way since 2018 after the Tax Cuts and Jobs Act was passed. Now, why does all of this matter? Well, there's going to be more and more capital flowing in. Every time that there is a policy shift and a massive amount of insider buying, you see tech and high beta really do well. We now are moving into phase 2 of this, and it's going to be shorter cycles than ever before, but commodities and financials are getting a bid right now. Blake talked about this, basic materials increasing, industrial focus, and the banks. Banks are starting to take off. Later this year, as we move into the further part of the cycle, you're going to see a lot of move back into defensive stocks. And then once we get to the point where there may be some sort of crisis or some sort of downturn as they continue to try to fight inflation or even stagflation, the focus will be on bond duration and cash. This article right here, TheoTrade, is listed. You can read it after this conversation, but I want you to just pay very close attention to this. In this environment, it's very important that you go and get the bag. You go and you get paid because inflation is going to remain elevated even in the face of the current numbers. And what I'm specifically speaking about is the ongoing debasement of the currency. CPI is not going to show debasement. Equities will. So you want to be tied to very specific anchors. Gold and silver. If people will say, I don't make any yield off of gold. Well, look at some of the royalty companies. Sandstorm just got bought. Sandstorm was a hell of a company, and it just got bought out. So now you're down to Royal Gold. You have Franco-Nevada. You have all of these companies that are just basically paying people on the back of their mining rights. This is a very good way to just simply collect yield and dividend reinvest. In addition, capital efficient stocks. You have to have companies that are just printing cash, that turn around, take $1 and turn it into 100. You're going to find a lot of these names: Domino's, Visa, Deere, even Berkshire Hathaway. Utilities and midstream. Somebody asked about natural gas. Don't focus on natural gas prices. Focus on the tolls. Focus on what is actually moving commodities through the midstream and collect the yield. In addition to that, global diversification. I've been very bullish on Switzerland. The currency's already up. It's gone from $1.10 to $1.26. In addition to that, Look at the data centers. Look at everything that the sovereign wealth funds are coming into the United States and investing in. Get cash flow now, and then have that cash flow be your anchor to trade. There are so many assets out there that sovereign wealth funds, the Norway fund, the UAE, the Saudi funds, they're coming into the United States and they're extracting capital through data centers, ports, all these different utilities. It's very important that you have this income and then take that income and trade with it. That's how you turn a 6 to 7% yield on energy transfer into a 50% return, because you're taking the cash that these companies are giving you and you're turning around and you're actively trading it. We're going to dig deeper into that today at 11:30. Don Kaufman's coming up momentarily, and I will be back at 1 o'clock to start the masterclass on Tesla. We're going to throw the presentation again back into the chat. Train's leaving the station, everybody. So last opportunity to be a part of this, the One Stock Freedom Plan. I hope everybody has a great day. If I don't see you today, I will be back tomorrow, 8:45 for TheoTrade Market Masters. Have a great day.